Hello everyone, Greg Diamond with another edition of Diamonds as Trader. And last week we saw inflation numbers that came out that were a little sticky. Market kind of topped and dropped a little bit. So this is going to be something that really isn't going to change for quite some time, given what the Federal Reserve has done to start cutting interest rates. But the problem here is if they're cutting interest rates and inflation is actually not coming down as much as they would like, now they're in a sticky situation. And then this week is going to be important because we get the first jobs report after the Federal Reserve has started cutting interest rates. So this doesn't mean that we're going to see huge crashes and booms, but it is going to mean that we're going to see incredible volatility, which is exciting for me. So basically, it's going to be the market's going to be very specific and react to all this inflation and then job report to see what kind of strength or weakness the economy is going through. And we're going to see these ebbs and flows for quite some time. You throw in an election and that adds a little bit more volatility. But this week I'm just going to cover two charts, and I shared these with 10 stock trader subscribers as well. This is JPMorgan, the biggest financial institution in the world, and we can see here, I had this outline forecast for a top in late August for most stocks, okay, and particularly the indexes. Now, some of these stocks and indexes didn't follow the forecast as closely as others, but we can see with JPMorgan, again, one of the biggest institutions out there, that this formed quite well. You can see a top here right on August 30th. Traded down. We see we didn't even come close to making that new swing high. And these are some of the other dates that I have, as important. Next week, October 8th, and then, getting into late October right before the election. So you can see here in blue, I have not as a bearish scenario, but, it moved down, bounced around, then maybe we find support within this uptrend, and then we start to look to take off, into maybe after around the election. Other ones a little bit more volatile here in red. Where it actually, maybe spooks some people, where we actually start breaking down below this support, okay? But we also have Fibonacci support here around, this black box, which is anywhere from 190 to 180, and that makes a time cycle low into and around the election, and then we move higher. So that's what I'm looking for in JPMorgan, and then really kind of like a similar in XLF, the financial and bank ETF. There. And then I also highlighted the dollar, and I think the dollar is important, and there's a couple different ways to look at how this might play out. Okay, so you can see I have this ending diagonal here in black. Maybe it trades back a little lower, but then we get some type of a pop here. You can see the positive divergence here on the RSI. Okay, I'll zoom in so you can see that a little bit more. And we're seeing a little bit of a pullback in gold and silver today as well. So this, and there's a couple different ways to view this. Number one, inflation isn't as coming down as much as the Federal Reserve would want, or that the market anticipates, in the dollar rallying. Other is flight to safety. Something else happens, whether it be overseas. Obviously, there's wars going on. Whether it's China, there's a little bit of a flight to safety. This weighs on stocks. This weighs on gold and silver, and then we see this dollar pop up, and then again we get into these time cycle points, inflection points, and that's where I think things are going to get really exciting. So those are two things that I'm looking at this week, both again JPMorgan, XLF, the banks in particular, and then how the dollar reacts. We have quarter end today, September 30th, and then we get important jobs numbers at the end of the week. So again, as I mentioned, we'll see how these ebbs and flow goes between inflation and jobs, whether that's strong or weak. But given the Federal Reserve has cut interest rates, the market does not want to see them make a mistake, and anything that might say that it is a mistake results in volatility, which is obviously going to be good for trading for the rest of the year. All right, so thank you very much. I'll see you next week.